Hey there, everyone. Welcome to this morning's edition of the NPC Markets Morning Call. It's Groundhog Day, people. Stocks higher on US Iran hopes. I think that is probably the 150th time I've written that headline this year. And that's despite the fact that this thing's been only really going on since March. Look, this one's going to be a short one today. There's not really much point going through. You've all heard it before. You've all heard Trump's crap before. You've all heard, that it's all been solved. Oil's gone down into the 90s. Let's just take a bit of a Friday break from the bullshit, basically, and have a look at what's mattered and look ahead to next week. I think because. It really is just getting sort of boring now, or beyond boring. So Nvidia despite a record result, didn't do particularly well overnight, down about 1.8%, as you can see in the top left corner there. Trump's awarded a $1 billion grant for quantum computing to IBM overnight, so they're up 12.5%. That is pretty interesting. It's one of our outlying themes in our market outlook at the start of the year. IBM was one of the stocks on that list, but it really is early stage technology. If you think that Anthropic's Mythos could cause some chaos, quantum computing would basically change every bit of encryption, blockchain, and everything in the world. So the likelihood is, I can't really see them releasing it into the wild for many, many years yet, let alone it being commercially available and revenue generating. But it may well be for IBM, but it'd only be selling to governments. It's the equivalent of enriched uranium in terms of compute power. It would definitely have to be in the correct hands. Walmart got smacked up actually, down about 7.3%. They absorbed 175 million in fuel costs alone by themselves, flagged higher retail prices in H2 if energy stays elevated. Just a quick reminder, oil's still at $100. So, we're literally, to get back to normal, which would drag oil prices back down to $60 or $70, would take at least 3 months now. We've had this thing closed for so long. Basically, what we're seeing really is, this is going to start to filter through into the inflation numbers at the consumer end, which is going to filter through into rates, which is going to filter through into the growth market. So basically at this point, if you've got any common sense, you're just sitting on your hands and waiting until this thing gets absolutely whacked. Bond yields are through the roof. Buying here, I think, is, it's risky at best. And probably insanity at worst. So we've got some SpaceX IPO news as well. Projected valuation at $2 trillion after the XAI merger. Will be the largest IPO on record. It's supposedly in June sometime. We're going to do a little bit of a deep dive into that, into our weekly podcast, Bulls versus Bears. But it's likely to suck around between OpenAI, Anthropic and SpaceX. We're looking at anywhere in the vicinity of, with those massive valuations, about $250 billion being sucked out of the market. It's and pushed into these things over the course of the next couple of months. That money's got to come from somewhere, and it looks like it's coming from coming from the big names like Nvidia. There's a great quote from one of the analysts, which is a rare thing to say, that basically it even Usain Bolt can't run at 100 meter pace forever, and that's what the investors are really looking at Nvidia doing. And we did a little bit of a study in terms of whether they could maintain their growth at that 80% mark. And essentially, to do that, they would end up for another 5 to 10 years. That end up being 110% of global GDP, which obviously is impossible. So, investors are starting to realize that at $5.5 trillion, it can't, there's only so much money in the world. There's only so much GDP productivity in the world. And they're not going to have the market to themselves forever. So realistically, the best you're probably going to hope for for Nvidia over the next couple of years is maybe to double, and that's a massive maybe. Not to say that it won't go up. It has reached a behemoth point that that scale almost becomes impossible because it's too big. There's not enough. There won't be enough consumers. There won't be enough. There won't be enough overall demand, and who they're selling to won't be able to sell enough product to justify the spend on their chips. So. But overall, we've seen oil off about 7% this week. What we've also seen over the course of the last 60 days, 60 to 90 days with this Iran thing is that, one comment from Trump or Iran can see that 7% recoup pretty quickly. So looking out to next week, bond yields did sort of settle down a little bit. But look, we've eked out a tiny gain basically over the course of this week. The technical is still pretty strong, but again, buying at overbought levels is probably not the smartest idea. Gold relatively flat, silver relatively flat for the week. Copper continues its rally, has been really solid actually. And the crude on a 5-day basis is only down that 3.2%. So you've actually still got coal up, but lithium and uranium drifted lower. So, but overall, but bond yields have steadied. They were down 3 basis points last night, but you've still got US 10-year Treasury yields at 4.56, and 30 years above 50 as well. Above 5%. That is, that's pretty enormous. In terms of key levels, what's ahead really? We've continued to run peace talks. Next week we're going to see Australian CPI. We're going to see some GDP numbers, etc. as well out of the US, and which will come with PCE, but they're revised numbers. There was some interesting articles actually in the not such good news for the likes of GYG shareholders. They've canned their US operations, which was a real keystone of their IPO. And I would imagine is going to be pretty ugly at some stage today. Ainsworth Gaming as well has warned of weaker profit and revenue on a US slump. And we've got some corporate or C-suite movements in the likes of AMP and BlueScope today as well. So we're basically and look, we've got Super Retail actually. Rebel Sports has been is now facing an underpayment of their employees as a class action. So. And Monadelphous secured 120 million in new contracts. So 4 or 5 bad ones, one decent one. Don't expect the market to do a hell of a lot today. But look, we're going to do a little bit of an in-depth into the SpaceX IPO on the podcast this afternoon. Maybe have a look at some of these upcoming IPOs, what the market implications are going to be for the US and the US market and the indexes, because they're looking at bending the rules to put them straight into the indexes and how that's going to have an effect. But join myself, Kai Chen, and Jonathan Takadina for Bulls versus Bears. You can subscribe at MPC Markets on YouTube, Spotify, and Apple Podcasts, and most of your favorite podcast apps. It sort of pushes them out to the likes of iHeartRadio, etc. So, but look, have a great weekend, everyone. If you don't watch the podcast this afternoon, which you definitely should, but if you don't, have a great weekend, and we will speak again Monday.
Feeling lost with investing? Meet Mosaic. Mosaic is MPC Markets' platform that turns confusing markets into clear, actionable guidance for your portfolio. Discover Mosaic today. Portfolio and trade ideas in one place for clients and subscribers, powered by MPC Markets.